Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. If you know anything about crypto and sorry the news, I'm sure you have read about crypto mining. And if you have read about crypto mining, you have read about how Bitcoin depends on proof of work, or which is so terrible for the environment. And about how Ethereum is moving from proof of work to proof of stake sun, which is so much better for the environment. Which is better is answering that most proof of work versus proof of stake pieces either get too technical or too obsessively based. From an investor perspective, you just want the fact and the trade-off so that you can make an investment decision. So, herein lies the investor definitive guide to an actual book could be reading about this. So, a lot of the technical nonsense will be prepared over to avoid word count creep. But first, a quick letter that I promise is relevant. This may surprise you, dear reader, but investing and software engineering are two different. So, in software engineering investing, you have a certain amount of capital and you allocate that certain amount of capital in a certain way. When you choose to investing in thing one, you can also invest that same capital into thing two. And in choosing to allocate to thing one over thing two, the allocator takes several things into account like expected return, risk profile, or if investing in thing two would be cause for termination cause the boss doesn't like thing two for whatever reason. In software engineering, you have a product that has a particular behavior and structure, and engineering will design something that behaves a certain way and will make structural decisions for the code. The structural decisions determine how easy it will be to make adjustments down the road. Cryptocurrencies aim to operate their networks without the extensive use of third parties. To do that, network participants need a way to decide on what's what and come to a consensus. Enter the consensus mechanism. There are many consensus mechanisms, but the two most important ones are proof of work or POW and proof of stake or POS. Between the two, there are trade-offs, but the most critical thing to know about consensus mechanisms is that they need resilience to word of attackers of the network, or be they competitors, governments, or a cabal of wealthy individuals. So, let's take a piecemeal approach for the investor guide by first defending POW or in the context of Bitcoin. Second, defending POS or in the context of Ethereum. And third, outlining some of the trade-offs. There are so many awful comparison people use to describe proof of work. Here's one of mine. There's a lottery. To win the lottery, you need to buy the winning lottery ticket. To buy a lottery ticket, you need a computer that can do lottery ticket buying. The more computers you have, the more lottery tickets you can buy. If your lottery ticket match the winning number, you win. So, the more computers you have, the more likely you are to win the lottery. In Bitcoin, which uses POW miners, or as the POW lottery tickets buyers are called, use application-specific computers to guess the number one the winning lottery ticket. Those computers have microchips that can do the guessing and run on electricity. The only way to get the right number is to do the work. Proof of work has distinct advantage and disadvantage. POW is a resilient way to build distribute consensus and data spam. Proof of work has been used in Bitcoin since it launched in 2009 to tracely run a decentralized borderless open payment network. Bitcoin proof of work mechanism worked just well when a Bitcoin was worth 6 cents as it did when it was worth. But online proof of work works, and it worked really well. This said, proof-of-work consensus mechanisms are hardware-intensive and rely on high-demand microprocessors. As a result, investing in proof-of-work can take time if there are supply chain dispersion, as we have seen recently. Maybe that's all for me. Don't forget to like, comment, share, and subscribe. Thank you.